Everybody, today we're going to be answering a recent client question I had. And this is a question that maybe many of you are asking yourselves, or maybe you're doing research on this or asking your own financial advisor. Today we're going to be tackling that question. And that question is, should we be moving our cash out of the US dollar? Should we be thinking about other currencies? And so today we'll be tackling what this means for you, your financial plan, and dig a little deeper in some history and hopefully provide some best practices on what you can do. The first 100 days of President Trump's second term, they're bringing new economic policies, a lot of uncertainty. So it's natural to have concerns around the US dollar. So hopefully after today's video, you'll get to see what the history of the US dollar has proven to us. We can explore some past situations with similar volatility and hopefully provide some actionable steps for you to help make informed decisions about your financial future and not just make off-the-cuff decisions based off one news headline or something like that. Let's talk about why this question is so relevant today. The US dollar has always been a cornerstone of global trade and finance, but there are times in history where it's faced challenges, sometimes due to politics, sometimes due to international trade, relations, and sometimes due to unforeseen global events. For example, the 1970s, the dollar devaluation post-Bretton Woods, in 1971, President Nixon took the US off the gold standard, leading to the Nixon shock. This decision triggered a series of devaluations in the US dollar, causing inflation to absolutely soar, creating uncertainty for US investors. Even in times of extreme devaluation, the dollar remained the dominant global currency. When it fluctuated, long-term policies and global trust in US institutions helped stabilize it. Another example could be in the 1980s, the Plaza Accord. So after President Reagan's policies pushed the dollar to historically high levels, other major economies, including Japan, Germany, France, and the United Kingdom, came together in the Plaza Accord of 1985 to devalue the dollar in relation to the yen and the Deutschmark. When international partners intervene in the value of the dollar, it could have short-term effects. But again, the global economy remained intertwined with US financial markets and its currency. Another example could be the 2008 financial crisis, the dollar strength amidst global instability. So in the aftermath of the 2008 crisis, while many currencies suffered, the US dollar actually strengthened as investors sought a safe haven in US assets. A lesson we can take from this as well is when global financial markets are unstable, the US dollar often emerges as the go-to currency, proving its resilience even in crisis. What does this history teach us? The US dollar, despite its ups and downs, has proven time and time again to be a resilient and reliable global currency. But I understand your concerns. If you're feeling uneasy about the dollar right now, you're not alone. The political and economic landscape can feel unpredictable, and that could lead to uncertainty in the markets. One of the tips I can give you today is to understand that diversification is key. The first action step is making sure you have a diversified portfolio. So this doesn't just mean investing in a different currency, but you should have a well-diversified portfolio that includes both US and international assets. International equities, bonds, and real estate can help hedge against the fluctuations in the dollar. Another tip is hedging with foreign currency investments. So for those that are particularly concerned about currency fluctuations, foreign currency ETFs or mutual funds can be a really good way to hedge against the dollar without completely leaving the US dollar behind. Another tip is bond investments in precious metals. So US Treasuries and high quality corporate bonds can offer stability when the dollar fluctuates. Also, precious metals like gold often rise in value when the dollar weakens, making them a hedge against inflation historically. we need to understand economic trends. So let's get into some of the global factors that impact the dollar. The US economy is tied to a complex web of global markets, trade policies, and geopolitical events. So here are a few important ones to watch closely. First is the global trade dynamics. The role of international trade agreements like NAFTA and the current tensions with China and other trading partners, these can influence the dollar's strength by affecting the trade deficit and US export competitiveness. Then we have Federal Reserve and interest rates. So the actions of the Federal Reserve play a significant role in the value of the dollar. So when interest rates rise, the dollar typically strengthens. Conversely, if the Fed lowers rates, it can lead to a weaker dollar. So what do you do with all this information? First, we have to try to stay calm and avoid any emotional decisions. We don't want to make any emotional decisions because what history has shown is that the dollar has been resilient, but we must remain flexible. A diversified investment strategy is your best approach to manage uncertainty. A couple of actionable steps you can do is step one, you can review your portfolio and ensure you are well diversified. Step two, if this is overwhelming for you, consider working with a certified financial planner and advisor to assess whether currency diversification or hedging strategies make sense for your unique situation. Step three is to stay informed about upcoming policy decisions and their potential impact on the economy. If you're feeling uncertain about your financial strategy or you're not sure how to implement these recommendations, feel free to reach out. I would be happy to schedule a consultation so I can help you navigate these concerns and help you make informed decisions that align with your long-term goals. Thanks for watching. Don't forget to subscribe for more financial insights, and I'll see you in the next video. Once again, it's Eric Rodriguez here. If you're looking to get help securing your financial future and you're serious about implementing a wealth plan for your specific situation, feel free to check out my website, wealthbllc.com, to learn more about how I work with clients, how I help them align their resources with their values, and put together a comprehensive plan to help them retire on their terms.